So guys, after you're done analyzing your chart like this perfectly, like this, if it's a continuation, you see that it has been mitigating order blocks, and then you have this order block that hasn't yet been mitigated. I need you to stop putting your sell limit here and then your stop loss above your order block while you're anticipating that the market is going to do something like that, right? I need you to stop doing this, right? I'm going to show you what you need to be doing. Same like this, if it's a reversal whereby it mitigates the high time frame and then it takes out the higher low to create a change of character, and then you have this unmitigated order block. I need you to stop putting sell limits there and stop loss above your order block like that, anticipating that market is going to do something like that. I'm sure most of the time you've seen the market doing something like this. Weeks you out, after it weeks you out, and then it goes into your direction, right? After it weeks you out, then it goes into your direction. What I need you to start doing is this. Instead of drawing the order block, you can still draw it just for guidelines sake. You can still draw it, but I don't want you to trade direct from that order block. I need you to trade the reaction of what's going to happen on that order block. So this is what I mean. After you analyze that you have unmitigated order block, I need you to go to the highest point of where your order block was starting and draw a line. After you draw a line like that, I need you to see something like this. When market goes to this order block, I want you to see that market goes beyond the order block and above that line, right? When the market goes, or price goes above that line, at this stage, I need you to see that market is going to close below the line inside your order block, right? After it does that, right, then that is when you can sell with a stop loss above the highest point where the market went, and then you target any imbalance that is below here. At least always target 2-to-1 or 3-to-1 risky reward ratio. This is what I need you to be doing. Same applies here. What you need to do is draw your line on top of where your order block ends. After I draw your line, to see that line getting swept, then market should come and close below that line you draw above the highest point of your where your order block is starting. From there, that is when you can sell with stop loss above the highest point of where the market went when it was sweeping this line. So this way you are trading the reaction of this order block instead of just trading the mitigation of this order block. When you see that price is breaking these lows, right, you already know that you're in a downtrend, so you want to sell, right? When you start marking, you've got imbalance here, so you can see that this imbalance has been mitigated and the next imbalance you're supposed to sell is here, right? So look what happens, right? Price just goes on, weeks out your order block, and then it falls down to come and fill up this imbalance here. So instead of you leaving your sell limit there and targeting this imbalance here to go and take you out, then goes into your direction, right? You do not want to do this. What you need to do is, instead of you drawing your order block like that, I need you to draw a line like that. After it gets swept and price closes below it, that is when you want to sell here with stop loss above there, and now you can target your imbalance down there, right? That's how you should go about it. You are not just trading the mitigation of this order block, you are trading the reaction of this order block here. Please like, subscribe, and if you need mentorship or signals, let me know in the comment section. Here's another example, right? See, price mitigates your higher time frame. After it mitigates your higher time frame, it has caused the change of character. Now it's time for a reversal, right? Instead of you drawing that as the order block you want to sell from, if you sell from here, you can clearly see that it's going to take you out. You do not want to sell direct from this order block, targeting the low here. You do not want to trade this order block like that. What you can do is you can sell the reaction of this order block. Instead of drawing an order block like that, you can just draw it for the sake of guideline, but you use that line, the highest point of your order block. After it gets swept and then price closes below your line, then you can sell with stop loss at the highest point where it went. Then you can target the imbalance here. So it's either your take profit can be below there or normally here. I always prefer the take profit to be here instead of down here, because there are times when price can just reverse from after it gets a reaction from this order block. Please like, subscribe, and if you need mentorship or signals, let me know in the comment section. Another example is here. You can clearly see that this market is going down because it's creating those break of structure to the downwards. It's breaking those lows, right? So you have to keep looking for sales. You can identify that we have got an imbalance here. You start drawing your order block. You can either draw that as an order block. As you can see, it just causes a small reaction. Others will trade that one, but it's still going to check you out before this movement. How you catch this movement is you just draw a line on top of that highest point where your order block is. You wait for it to be swept. After price sweeps that highest point where your order block is, others will draw that as their extreme order block. But either way, you have to wait until the highest point of where your order block is to be swept. After it's swept like that, that is when you can now sell. After it's swept, it came to close there, that is where you sell with your stop loss just above where it went, and you can target that low as your take profit, or because that's where your imbalance is. Down here we do not have any imbalance, everything has been mitigated, so you use that as a take profit or use this as your take profit, but don't be greedy. Just use your imbalance as your take profit, because you already know that your imbalance will get filled, but you don't know whether the price will go further down or it will react from this order block and continue going up. This is the logical take profit you should go with.